Another great day, another great moment to speak about Polkadot. Welcome to my presentation, guys. We're talking about January price prediction on this crypto, heading towards something that I would say a market reversal on the sentiment. Yet for the short term, again, we're looking for dominating by the bulls and having a good time. Meanwhile, the past 24 hours and the last 7 days, even for Polkadot, which used to be fine, are pretty much suffering at the moment. On a $300 million volume for the past 24 hours, the market is looking pretty oversold. Let's get into the charts, find out more. Not before, make sure to enjoy my YouTube channel, find out more price predictions, and take care about yourself with all sorts of learning materials, including live trades that I perform where you can get the motivation around the topic and find out more how do I perform and how do I trade. You join my journal. Feel free to check out my option number 1. You can join my trades, no prior fee. Only commission from the pure profits achieved, where we perform the trading for you through API trading permission, completely outsourced for you, and it's just based on performance and commission, right? So you pay the commission every 7 days based on performance, simple and straightforward. At the same time, we have basically the coaching program, the one-on-one coaching program, which is only for serious people that are interested into monetizing the huge possibility of this financial freedom journey around the crypto space. Great. So what's happening on the Polkadot side? 4-hour candlesticks. We're looking into a shorter term discussion right now and having a bunch of charts playing around. We are having a very interesting moment that is pretty much at the end. So we have completed basically a cycle here of growth and complete retracement. It's very interesting how the liquidity has been actually grabbed twice, especially in the long candlestick generated by the market dump on the 3rd of January. We've been taking the markets back to the same levels, and now it's time basically for the market sentiment to start becoming bullish again, as the whole package of liquidity has been grabbed. There's no retail traders left out there. The funding fees for leverage and futures are again very cheap, so it's time basically for us to take the markets to the next level. Especially we're finding ourselves on a golden pocket support. We're also finding ourselves on a major support coming from the median line of the end short volume with an average price. This is great at the end of the day, considering that the market structures are enjoying to take the liquidity out of the way before moving, just like they did, for example, here. They came back all the way back to the same starting point. If you look into the wick, we actually filled up with that one. And then we basically moved very aggressively to the top, printing a movement from this place of 50% market increase. Now, the first thing that I'm going to question towards this possible comparison is going to be the current force of the market. It depends a lot on the ETF news that are going to come out probably this week. It depends a lot, guys, as the crypto space right now is kept very close to the ETF discussion, and in many cases not in a positive way, especially while all the rumors of rejection and so on. People take it pretty bad, and the market makers and the exchanges are also enjoying to manipulate the markets and take advantage of the panic selling around those moments. So for the moment, as of January, we would target towards the upside $8 mark, and then a movement basically to 8.5. But if so, that would be great, because the retracement back to the $8 will represent support, and then we can push to the next golden pocket, which is coming from the major structure. This would be the greatest scenario out there that we could consider for January. Now, if the ETF news are going to become positive, then we'll get approved and the market could react brutally. I mean, we could easily get basically the movement straight into the $9, revisit or $8 mark, and then push for the highs. That would be the ETF news discussion on the positive side. At the same scenario, at the same time, we need to keep in mind the fact that if we're losing basically this level, which is very less likely and unlikely, as we will basically deal with a lot of the room towards the backside and towards the $5 area, which is no longer something people would enjoy about the markets. I'm definitely considering that this one at the time we're holding 6.5, 6.4, that's 6.3. Those are the ultimate levels. You cannot lose them under any circumstances. So as soon as we're holding them, we're going to get back to the $8 mark on a new market rally that we're printing and a very healthy momentum. 15% towards that point, which is great. It's achievable, and it's something that I will take every single day. There is also a convergence appearing in the bottom of the CRSI, which is great. So measuring the strength, it's clear that the bears have lost it at this level. They're no longer in domination, and it's more likely that the markets will react to this convergence existent on the lower lows and then higher lows on the indicator side. This is clearly a convergence. That's pretty much all where we're located, folks. Enjoy yourself, like this video, subscribe to the YouTube channel, and let me know more on the trading side if you'd like to participate. All the links in the description area and comments area. You can find out more, you can reach out to me for questions and so on, including the ability for the one-on-one coaching program. You can register now for more details. Have a good time, folks. We'll talk to you soon.